William Welch Deloitte didn't just start a firm. He set off on a journey, pioneering an optimism and perspective that continue to inspire us at every turn. For 175 years, we've helped clients navigate seismic change. In doing so, each of us has left our indelible mark, forever connecting us to a larger vision, and, most importantly, to each other. Here's to 175 years of seeing what's possible and making an impact that matters.
Successful global compliance is demanding. How do you make sure you get the job done? File accurately, on time, in every country, and across every process? How do you gain control, visibility, transparency, and governance globally and at a local filing level? How do you reduce costs and risks? How do you free up your team's valuable time? How do you look to the future, explore the latest technology, tackle new regulations, and plan ahead? How do you leverage the power of your data to deliver real commercial value? At Deloitte, we aim to make your life easier and help you deliver your global compliance successfully. We can also help you to articulate and demonstrate real business value to your stakeholders. We do this in 5 simple steps. We help you get it done by bringing the wealth of Deloitte's global experience. From our deep in-country experience to provide market insight, through to our regional delivery centers, to our centralized coordination teams that support governance globally and control locally. Our MyInsight platform integrates visibility into your data collection and processing activities with a seamless process. Deloitte can cleanse, map, and classify your data and make it visible to you through a single hub. Data can then be consolidated, reconciled, and reported, including any required local tax regulatory requirements. Reports can be produced for your statute and business needs. We will be your eyes and ears globally to assist you to understand local changes so that you can gain control of your compliance. By enhancing your compliance management, you can look to reduce the overall cost of delivery and risk. This will free up your people so that they can add more value and help grow your business, meaning you can get more from less. Deloitte's global experience means we are at the forefront when it comes to resource planning, regulatory change, and digital readiness. This, coupled with our innovation labs and market know-how, means we're best placed to work with you and guide you on this journey. We have the experience to help you make practical plans for what we know is coming and to scenario plan for what might be. All of this combined with setting out achievable actions will help you put your best foot forward as you face the future. We help you discover value to find commercial return for your business and free up your talented workforce to keep them challenged and engaged. Get it done. Gain control. More from less. Face the future. Discover value. Deliver confidence. Successful global compliance can be demanding, but Deloitte makes it easier and helps you see beyond.
Yo, Jan, ¿cómo es? It's a beautiful day out here. Good morning, everyone. I am Lovejoy Ocher, a senior consultant with the Tax and Legal Department and your MC for today. On this webinar today, we would like to share our insights, perspectives, and expectations on the new transfer pricing regulations in Ghana. We plan to spend an hour and 30 minutes for the session. Within this period, we will take an address from a technical advisor from the African Tax Administration Forum. We will do a brief presentation on the key changes of the new transfer pricing regulation and have a panelist discussion that will include addressing questions from attendees. Let's take note of a few housekeeping rules before we get started. We would like to mention that this webinar is being recorded for future use. Currently, all participants have been muted, but don't worry. During the Q&A session, you can raise your hands and you'll be unmuted to speak. You can as well drop all your comments, questions in the Q&A chat box on your screen. A survey link will be put in the chat box for you to provide us with your feedback getting to the end of the webinar. We intend making this session very interactive, and as such, we have created polls for your feedback on transfer pricing issues. We will have our first poll now to get acquainted with how it goes. On your screen now, you can see a pop-up. Please read and provide us with your feedback. Thank you so much. Without further ado, we would like to introduce our lead task partner, Mr. George Ankoma, to give us the welcome address.
George Ankoma is a tax and legal partner at Deloitte Ghana with over 20 years experience in serving clients by providing them with the entire spectrum of tax services. His clients include several multinational companies who are global employers with substantial expat population worldwide. George's professional career started with Ghana Revenue Authority, where he worked for over 8 years and rose to the level of Principal Inspector of Taxes. George is a member of the Institute of Chartered Accountants Ghana and a Chartered Tax Practitioner with the Chartered Institute of Taxation in Ghana. He holds a Master's degree in Finance from the University of Leicester, UK.
Hello and good morning, ladies and gentlemen. I welcome you all to today's section. Before I veer into the purpose of today's meeting, I would like us to have a brief background of Ghana's transfer pricing landscape. As much of you may be aware, the arm's length principle has been part of our tax laws in the past. The erstwhile Internal Revenue Act 2000 Act 592 had transfer pricing as part of the anti-avoidance provisions under Section 70, which empowered the Commissioner General of Ghana Revenue Authority to make transfer pricing adjustments when he deems it necessary. The requirements for preparing transfer pricing documentation and filing, however, was not part of the provisions until the introduction of the first transfer pricing regulation in 2012. Given that this was new in Ghana, we are aware that the tax authorities were not at the time very active in dealing with transfer pricing issues and reviews. However, with time, the transfer pricing unit was set up by the Ghana Revenue Authority that made sure that transfer pricing reviews are done on a daily basis. Also, as part of government's efforts to enhance revenue mobilization and to align with global transfer pricing trends, introduced the new transfer pricing regulation in 2020, last year. We at Deloitte believe in leading the way in industry engagements and thought leadership. And in line with this, we are organizing this webinar to provide insights for our clients and the general public on recent developments in the area of transfer pricing landscape in Ghana. To help us do this, we have Likori, who is the technical advisor of the Africa Tax Administration Forum, ATAF. We have Tayo Okunade, who is a tax partner and lead transfer pricing partner for Deloitte West Africa. We have Jerry Eduse, senior manager and head of tax for Newmont Ghana, Eric Osepoku, who is also a transfer pricing manager with Deloitte Ghana, and myself to do justice to the issues. I urge you all to participate in this morning's section and also to share your views and questions by posting, as Lovejoy said earlier, posting your questions and then share your perspectives with us. At this stage, I would like to take opportunity to invite our guest speaker, Lee Corey of the ATAF, to join us and give his keynote address. Can we have Lee Corey's address?
Lee is on secondment from the OECD to the African Tax Administration Forum, where he is a technical advisor on international taxation. He provides technical assistance on transfer pricing and other international tax issues to the ATF Secretariat and to African countries. He has been a technical advisor to the ATF Cross-Border Taxation Technical Committee since its inception in 2014 and provides technical advice to several African countries. Previously, he was a senior advisor at the OECD working on transfer pricing capacity building in developing countries and was closely involved in helping developing countries input their outcome on the OECD G20 BEPS project. Between 2009 and 2011, he worked for the South African Revenue Service as the transfer pricing senior specialist and was a South African delegate to the OECD Working Party 6. Previously, he was the assistant director for the transfer pricing at HMRC with responsibility for HMRC's transfer pricing work. He was a UK delegate at OECD WP6 and on the WP6 Bureau. Lee has also been an associate lecturer in international tax at the University of London and serves on the technical committees that reviews and advise the government on tax policy making in Nigeria.
Welcome, Lee.
Thank you very much, George, and good morning to everyone. I'm going to try to share my screen now with the presentation I'm going to use.
Yes, Lee, we can see.
Okay, so this morning I'm going to talk to you about the work that the African Tax Administration Forum, ATAF, has been doing in Africa to support African tax authorities address transfer pricing risks on the continent. So in around about 2015, ATAF started providing long-term technical assistance programs to countries, and the number of countries we're providing that assistance to has increased over the past 5 to 6 years. These programs, they primarily focus on transfer pricing, but they also cover other BEPS issues, so base erosion and profit shifting issues, such as interest deductibility issues, permanent establishment issues, and issues around tax treaties. So the programs are broad in scope, but they primarily focus on transfer pricing. And we deliver these programs in a number of partnerships with other development partners. Our primary partners in the programs are the OECD, the organization based in Paris, and the World Bank Group. But we also work with other development partners, such as the Intergovernmental Forum on Mining, known as IGF, when we're helping countries with transfer pricing issues related to the extractives industry. And some of the work we provide is to assist countries on their transfer pricing audit work. And when we work with countries in this area of tax, we work in partnership with the OECD UNDP Tax Inspectors Without Borders program, known as TIWB. So we have a number of partners, and we also, when we're in countries, make sure that if there are other development partners, so in one country, we're also working with the US Office of Technical Assistance. So we make sure we work with those partners to ensure that we provide a coordinated approach that doesn't duplicate efforts. As I mentioned earlier, the programs cover quite a broad scope. They're demand-led, so the country tells us what they want from the program, and we design the programs to meet their needs. And that includes the duration of the programs. Often the programs are usually 2 to 3 years long, but often get extended to cover new issues as the global tax rules are constantly changing. And in this slide, I've listed some of the main areas where we would often be providing support. And generally, the programs tend to cover most of these areas. So one of them being the issues that you're looking at today around legislation. So we worked with quite a number of countries on carrying reviews of their transfer pricing legislation, their transfer pricing regulations, documentation requirements. We do work around interest limitation rules, permanent establishments, as I mentioned earlier, processes to identify transfer pricing and other risks. And we will also work with countries on organizational issues. So we've helped a number of countries set up transfer pricing units, and in some cases, international tax teams. As I mentioned in the previous slide, we provide assistance to countries on their audits. Now, we sometimes do this on an anonymized basis, so to protect taxpayer confidentiality. However, in other cases, and this is a key part of TIWB as well, we will provide assistance which is on a full disclosure basis, and in those cases we will sign the country's non-disclosure agreement so that we don't disclose taxpayer information to other people. Increasingly, we're starting to do work around mutual agreement procedures and also around advanced pricing agreements. So we're doing looking at areas around tax certainty as well. And a key part of our work is skills building of tax officials on transfer pricing and other international tax related issues. So this map here shows you some of the countries where we've helped the country to enact new legislation. So you can see quite a number of countries in Southern Africa, also countries in East Africa, and quite a number in West Africa, as you can see from the map. And the areas we've helped countries in are transfer pricing. So as I mentioned earlier, this might be the primary legislation, although more often it's probably around regulations and around transfer pricing documentation requirements. This has also included helping some countries around enacting country by country reporting regulations, particularly for those countries that are members of the OECD Inclusive Framework and are required to implement the 4 BEPS minimum standards, which includes country by country reporting. Some countries we've helped them introduce interest deductibility rules. Some countries we've helped them introduce new legislation around permanent establishments. And more recently, we've worked with a number of countries around issues to do with the taxation of digital services. Obviously a very topical subject at the moment with the Inclusive Framework proposals and also those proposals from United Nations. So we've done quite a lot of work recently with countries around this issue. So what has been the impact of that work? So in total, we think there's so far from what we've gathered, there have been around 32 changes made by African countries to legislation, regulations, and guidance, where we've assisted countries in those changes. So that's fairly broad, and it covers the countries that I showed you in the map on the previous slide. The revenue impact of the work is already very evident. So you'll see here, we've assisted countries to collect additional tax of over 120 million and assess additional tax of in excess of 1.6 billion US dollars, and all of this in under 6 years. We've also assisted the Zambia Revenue Authority. You may have seen the Mopani case decision from the Supreme Court in Zambia in 2020 on the Mopani case. So this case involved the pricing of copper concentrate sold by the Mopani mining company in Zambia to its related party in Switzerland, which was a marketing company. And the ZRA considered that the pricing of the copper was undervalued. That case went all the way to the Supreme Court in Zambia, and last year the Supreme Court found in favor of the Zambia Revenue Authority and ordered Mopani to pay additional tax of over $13 million US. And we assisted the ZRA on that litigation case. But it's not all about revenue. We're also trying to assist countries to increase tax certainty in the country by implementing clearer rules, such as documentation requirements, so making it clearer to taxpayers what documentation they're required to keep, and also making those rules consistent with international standards. And as I mentioned in the previous slide, we're also looking to assist countries who are looking to implement advanced pricing agreement programs. And in fact, in one country, we're actually assisting the country with its negotiations with a taxpayer on a unilateral APA. And we may be doing some work on a bilateral APA in the near future in that country. So we've also produced a number of technical assistance products. So these are products to help countries on things such as drafting legislation. And these products, they're based on the global standards. So that's the framework in which we develop the products. But those products are tailor-made to meet the specific challenges faced by African countries. So for example, they may include certain simplification measures. And in many cases, we will put those measures in as policy options. So the framework, for example, on our drafting of transfer pricing legislation, our framework is based on Article 9 of the Model Tax Conventions. But we've got some policy options in there for countries to consider that might introduce simplification measures for them. And you can see here I've listed some of the products we've produced. So we have a number of these suggested approaches to drafting various types of legislation: transfer pricing, interest deductibility, permanent establishments, and most recently on drafting DST legislation. We consider these to be toolkits. So they're not a ATAP member agreed standard. They're toolkits that countries can use when they're enacting their own legislation, and provide a framework for that process. Now, different to that, there is an ATAP standard in terms of there's an ATAP model tax agreement, which a number of countries use. This is probably more closely aligned to the UN model than it is to the OECD model, but it has its own, again, variations to meet the specific challenges African countries face. The other area of technical assistance that ATAP is providing to its members is in the area of the global standard setting processes. So I'm sure many of you are aware of what's called the BEPS Inclusive Framework at the OECD. This is now 139 jurisdictions, of which 25, as you can see from the slide, are African countries. And the Inclusive Framework has fundamentally changed the global standard setting process. So now these African countries are members of this Inclusive Framework and are required to abide by the rules that are set by the Inclusive Framework, such as implementing the 4 BEPS minimum standards. So this is a key change. I should point out that at the moment, Ghana is not a member of the Inclusive Framework, but there are a number of West African countries that are, such as, for example, Nigeria and Senegal. So it requires those countries to commit to the same things that the rest of the Inclusive Framework members commit to. At the same time, it provides them with an opportunity to influence future global standards. So at the moment, we're seeing a lot of discussions around how to tax the digitalized economy. And these African countries are involved in that process. And as ATAF, we provide technical analysis and technical assistance to the 25 countries that are members of the Inclusive Framework. So we will provide a number of technical briefings before they attend the Inclusive Framework meetings, and the subsidiary bodies of the Inclusive Framework who do a lot of the technical committee work, such as the various working parties at the OECD. And of course, now that African countries are politically committed to these global standards, if they're Inclusive Framework members, it's absolutely vital that the global standards are fit for purpose in Africa. So we try to assist the countries in ensuring that that is the case going forward. And I should say that, of course, we don't just provide technical assistance. We also are working with countries to increase political awareness of these issues in African countries. So, as I mentioned earlier, there's a lot of discussions at the OECD on the digital tax work, what are called the Pillar 1 and Pillar 2 proposals. And we've been trying to raise political awareness on these issues in Africa. And one of the ways that we've tried to do that is by working very closely in partnership with the African Union. Last year in December, we worked with the African Union to arrange a finance ministers meeting in Africa to discuss these issues. And so that's been a very important development for us in the last year. We don't just work, though, with the global standard setting at the OECD. We also work with African countries to support them in the work of the United Nations tax discussions. So, for example, recently, the United Nations has also been considering the issue of how do you tax digital services, and have produced last year what's called Draft Article 12B for the UN tax model. And ATAF's provided written comments on this issue to the United Nations, where we've compared in particular the scope of these rules to the Pillar 1 proposals. So the Draft Article 12B is narrower in scope than the Pillar 1 proposals. And also the ATAF suggested approach to drafting DST legislation, which, like the Pillar 1 proposal, is broader in scope than the Draft Article 12B. So I will stop there, and I'm happy to, if George, if you like, I'm happy to take questions. I can see there are two chats in the chat room. I haven't looked at them yet because of giving the presentation, but I'm happy to take questions if people will find that helpful. So I'll hand back to you, George, for any questions. Thank you. And for the moment, I'll stop sharing.
All right. Thank you, Lee. Thanks so much. What we'll do is that in order not to exceed the time for the program, we'll hold on to the questions and answers side of the discussions. When we get to the panel discussions, then we'll pick all the questions and address them.
Yes, that's fine by me. Yes, that's fine. Thank you.
Okay, so thank you so much, Lee and George, for the insightful presentation. Gathering from the results of the polls we took earlier on, the initial polls that we took, you can see that about 38% of us today have basic knowledge on the transfer pricing regulation. We have about 29% who have fairly a bit of knowledge about it. 19% of us are professionals. 12% have no idea of the transfer pricing regulation, and just 2% are experts. So I believe this discussion is right, and it would help all of us to understand the regulation, the changes thereof. I believe this sets the tone for us to delve deeper into the key changes in the transfer pricing regulation. And to help us do this, we will have Eric Osei-Poku, a transfer pricing manager with Deloitte, to do this deep dive. Eric, if you can hear me from where you are, we kindly ask that you take over now.
Thank you very much, Lovejoy, and thank you, everybody. Good morning to you once again. We'll be delving deep into the highlights of the new transfer pricing regulation. We will also advise that you leave your comments in the chat box, and then we'll provide responses to you during the Q&A section. So, how did we get here? As George alluded in his presentation initially, the Extra Internal Revenue Act came into force in 2000, but had facets of transfer pricing in there. Then down the years, the Extra Transfer Pricing Regulation, the LI 2188, came into force. Now, with the coming into force of the LI 2188, it brought along with it documentation requirements and filing requirements, and some aspects of transfer pricing compliances that taxpayers were supposed to adhere to. Down the years, we've had the Income Tax Act at 896, and an aspect in terms of arm's length principle was actually specified in there. Now, finally, we've arrived at the new transfer price regulation that was issued in November 2020, the LI 2412. The laws governing the new transfer regulation in terms of Ghana, as I said, is the primary law, which is the Income Tax Act at 896. That's where the transfer pricing regulation emanates from. We also have practice notes, which we are expecting the Revenue Authority, which is currently at its draft stage, to issue in the coming months. We have judicial precedents and other case laws that we reference to. And then the OECD guidelines on transfer pricing. And let us note that the OECD guidelines on transfer pricing is not binding on the Revenue Authority, as Lee said, and currently, as we are aware, the Revenue Authority is not signed on to the OECD yet. And therefore, where there's discrepancy in terms of our laws and then the OECD, the Ghanaian law supersedes. The provisions of the new TP regulation mirrors the OECD guidelines. There are various provisions in there that was not part of the old regulation, the XWAL LI 2188, but the current law has provided it to improve the discourse that we have in transfer pricing. Some aspects in relation to services between persons in control relationships, where it looks at shareholder services, duplicated services, and the arm's length standard and the basis on which Ghana looks at it. There are also relation to intangible properties, where DEMP analysis is done, and then to further explain to taxpayers how the value of their brands can be exploited, the exploitation of their the value of brands can be done. It also talks about cost contribution arrangements, financial arrangements, and business structuring. Another aspect of the new transfer regulation is the safe harbors. Safe harbors is a welcoming news to taxpayers, as it reduces the burden of documentation to taxpayers. The new simplified approach looks at three main safe harbors that has been provided in the regulation. It looks at monetary value of arrangement when it does not exceed 200,000 United States dollars CD equivalent. In that case, you are exempted from putting out your documentation. Also, unlike the OECD that provides low value added services up to 5% on cost, in the new regulation, it provides up to 3% on actual cost in terms of low value added services. The link that we've been looking for between the GIPC regulation in terms of technology transfer agreements and the tax law has been provided in the new regulation. It provides that taxpayers who have approved TTA agreements will notify the Commissioner General, and the rates on those TTA agreements should not exceed 2%. That is, it should be below 2% of net profit. And it looks at in terms of royalties, management and technical fees, and know-how. Key changes that also come along with the new regulation is the filing requirements. The old law had transfer pricing written as part of the compliance that was supposed to be done. Local documentation was supposed to be prepared. However, you were not mandated to submit to the Revenue Authority unless it was requested. With the new law, local file is supposed to be prepared along with the master file preparation come year end. So we're looking at master file documenting the business of the group, including the value drivers, supply chain, financial activities, and all related party transactions that the group has undertaken with its related parties across the world. In addition, the introduction of a country-by-country report and notification has been introduced. Now, you are supposed to, per the regulation, you're supposed to file your country-by-country report if your ultimate parent is not obliged to file its country-by-country report in its jurisdiction. Also, if there's no competent authority agreement in your jurisdiction with the ultimate parent company, then you're supposed to file in Ghana. And then if there's systematic failure in terms of where your parent company exists, you're supposed to also file in Ghana. In terms of the law, it requires that the ultimate parent company is supposed to file in Ghana, but would elect the resident Ghanaian entity for tax purposes to do that final requirement on their behalf. Key to note, and in line with global compliance, it gives a total revenue of 2.9 billion Ghana cedis over a preceding year. You're excluded from filing country-by-country reports. So if the prior year, if your total revenue for the multinational entity did not exceed 2.9 million, you're not supposed to file your country-by-country report or notification. Now, key aspects of the new transfer regulation that also I have to take note is that in relation to the old transfer price regulation, it required that transfer pricing returns were supposed to be filed 4 months after the financial year end. In addition to the new regulation, they've included the local filing and then the master file documentation to be included in the filing 4 months after financial year end. And then 12 months after your financial year end, you're mandated to file your country-by-country reports. So we're looking in terms of an example. If my financial year end ends in December 2021, we are looking to file our annual transfer pricing return, the local file and master file on or before the 30th of April 2022. And then on or before the 31st of December 2022, the country-by-country report on notification will be sent to the Commissioner General. The various mediums of filing has been provided by the Revenue Authority, and we are looking at the practice note to provide further clarity in terms of how these mediums will be executed going forward. Thank you very much. In terms of this, gives a fair highlight of the new transfer pricing regulation. Thank you very, very much. There's going to be a poll that's going to pop up on your screen, our second poll. Please go through and then provide a response to the best of your understanding of the poll. Okay. We'll now introduce, we'd like to introduce Gloria Boydoku, our tax partner, to lead the moderation of the panelists for our webinar. Over to you, Gloria.
Gloria is a tax and regulatory partner responsible for global employer service, immigration, and regulatory services in Ghana. She has a broad range of experience covering business tax, international tax, and GS, global mobility, expert trade, and payroll services. She was seconded to the Deloitte London office, UK, in 2016, and is currently a member of the Deloitte Global GS of the Future of Leadership Network. Gloria is a chartered accountant and holds a master's degree in accounting and finance from the University of Professional Studies. She's a member of the Association of Chartered Certified Accountants and the Institute of Chartered Accountants Ghana. Gloria is a member of the Communication and Publication Committee of the Ghana Institution of Chartered Accountants.
Thank you very much for the insightful presentation, Eric. It is good to know that the new regulation has introduced some safe harbor rules to relieve taxpayers of some level of compliance burden. I think that is a good introduction. Right. We will be zooming straight into the panel discussion by introducing our first panelist.
Jerry is the Regional Senior Manager, responsible for taxation for Newmont Africa. He joined Newmont in 2012 and currently leads the tax function for the African region. Jerry's primary responsibility is to ensure tax compliance for the Newmont operations in Ghana, including the Ahafo and the Akyem mines. Jerry also has oversight responsibility over tax compliance in other African countries where Newmont has interest. Prior to joining Newmont, Jerry worked with one of the big four accounting firms as senior tax consultant between 2009 and 2012. During this period, Jerry consulted for clients across several industries, including mining support, financial services, telecoms, and etc. Jerry also served as an auditor in 2008, where he performed statutory audits to various indigenous and multinational companies. Jerry holds a Bachelor of Science degree in Administration, accounting option from the University of Ghana. He is a member of the Association of Chartered Certified Accountants UK, the Institute of Chartered Accountants Ghana, and the Chartered Institute of Taxation. His tax expertise covers executive and employee compensation restructuring, payroll tax, international tax, business tax, mergers, and acquisition. Other areas of experience include regulatory and tax compliance review, representation with regulatory authorities, tax and regulatory advisory.
Thank you, Jerry. Thanks for joining us. Let's see your face. Put on your camera.
My camera is on. Can you see me?
Yes, I can see you now. Wonderful. Sure. Great. You're most welcome. Let's have the second panelist.
Taiwo is a tax partner at Deloitte, Nigeria. He holds a Bachelor of Science in Accounting from University of Lagos. He's also a fellow in the Institute of Chartered Accountants of Nigeria, Association of Certified Chartered Accountants, and the Chartered Institute of Taxation, Nigeria. He's also a member of the Board of Tax and Fiscal Policy Faculty of ICN. Taiwo has over 15 years of experience in providing tax compliance and advisory services, international tax services, mergers and acquisition, tax dispute resolution, transfer pricing advisory, tax consulting, as well as financial and management reporting, spanning a wide range of industries, both in Nigeria, South Africa, and United Kingdom. His experience also includes developing and implementing transfer pricing policies, strategies, documentation, dispute resolution, and avoidance through application for advanced pricing agreement. He has developed special working relationship with the tax authorities and actively participated in the implementation of action plan on base erosion profit shifting in Nigeria. Taiwo has on many occasions served as a resource person and given presentation at ICANN EMCPD programs. He has facilitated several training programs organized by Deloitte Africa and Deloitte School of Tax. Taiwo also contributes to the tax policy making and serves on the technical committees that review and advise the government on the tax policy making in Nigeria. George Ankoma is a tax and legal partner at Deloitte Ghana with over 20 years experience in serving clients by providing them with the entire spectrum of tax service. His clients include several multinational companies who are global employers with substantial expat population worldwide. George's professional career started with Ghana Revenue Authority, where he worked for over 8 years and rose to the level of Principal Inspector of Taxes. George is a member of the Institute of Chartered Accountants Ghana and a Chartered Tax Practitioner with the Chartered Institute of Taxation in Ghana. He holds a Master's degree in Finance from the University of Leicester, UK.
Hello, George. Good to have you join us today. If you can hear us, just say hello.
Hello, yes. Everyone.
I can see your face. Thank you. I see Eric is on. Eric will also be joining us for today's discussion and supporting and responding to some of the questions from the participants. Let's have the next person. Okay, because Lee has already been introduced. Okay, Lee, let me see your face. Please say hello and put on your camera.
Hello.
Hi, great, I can see you now. We are set to start. Okay, I'll be starting with you, Lee. It's good you came last. So with your experience and I mean, from Ghana perspective, since the passing of the initial transfer pricing regulation in 2012, we are aware there's been many updates and directives issued by the OECD on transfer pricing, and many Africa countries have issued legislation to be abreast with the OECD guide. And again, what do you think are some of the possible factors influencing the adoption of, the new legislation now?
Thanks very much, Gloria. And you're right. There's been a number of very significant revisions to the global tax rules regarding transfer pricing, and in particular, those are reflected in the OECD transfer pricing guidelines. So some of those around the BEPS project, for example, actions, what they call actions 8 to 10, which deal with issues such as risk allocation and transfer pricing, how we tax intangibles, etc. And also the changes in Action 13 which looked at transfer pricing documentation and a new three-tiered approach of the local file, master file, and country-by-country reporting regulations. But there's also been significant changes since the end of the BEPS project. So only last year, with the new transfer pricing guidelines on financial transactions, which is, you know, a significant development in the process. You're right, a number of countries have introduced, in Africa, introduced new regulations, many of them probably subsequent to the BEPS reports. But I think it's important to bear in mind that in Ghana, you already did have some transfer pricing regulations. In many other African countries, there are no regulations, no transfer pricing documentation requirements. So you're starting from a slightly more advanced position than perhaps some other African countries. So I think in many ways, this is a good time for Ghana to be introducing new transfer pricing regulations. The global rules do keep changing. So the financial transactions paper is new or relatively new. So there'll always be changes, and there'll always be a need probably to revisit the regulations and make changes to them as the global tax picture develops. And I think, you know, the regulations have an important role to play, not only in providing the tax administration with the effective tools they need to address transfer pricing risk, but also they provide an important role in providing greater tax certainty to taxpayers. So I think the 2012 regulations were an important first step, but these new regulations are obviously important to take into account these very big changes that have taken place in the transfer pricing guidelines. And of course, now we face a new challenge with the impact of COVID on economies, and what does that mean in the transfer pricing space? Thanks very much.
Thank you very much. But my second question, I know you've touched on it, but if you could elaborate a bit, do you think that there are some factors that influence the adoption at this time besides COVID?
Well, as I say, I think my understanding is, you know, the GRA have some new transfer pricing people in the team, so maybe that's influenced the process, perhaps to a degree. Okay. I think, you know, I think probably just the fact there's been so many changes in the global tax rules has probably been the primary driver, though, of the change. Thanks.
Absolutely. Thank you very much. Tayo, can you hear us? If you can hear us, say hello. So my second question will come to you.
Hello.
Great. Good to see you now. Thank you.
Oh, good seeing you too.
Right. So building on from what Lee said, I know that Nigeria and Ghana started off with its first transfer pricing regulation way back in 2012. However, Nigeria was quick to respond to the new OECD transfer pricing guidelines in 2017, I believe, by the introduction of the new regulation in 2018. What, in your opinion, are some of the lessons Ghana can learn from your early adoption of the food transfer pricing compliance, especially with the country-by-country reporting? I mean, so we'll be looking at it from both the taxpayer administration perspective and then from taxpayer compliance perspective and from the, the administration of taxes perspective, that's the Commissioner General's perspective. So what do you think are some of the things we can learn from Nigerians' early adoption of the food transfer pricing regulation? Okay, we'll move to the next person and come back to Tayo when his network is a bit better. You know, virtual work, working from home, and he's joining us from Lagos. So sometimes some of those challenges are bound to happen, but I believe he will join us at the right time. Jerry, so we'll be moving to you whilst we wait for Tayo to reconnect. So there's been some discussion about the proposed regulation since 2018, and now it is finally here. Okay, do you think that the Ghanaian business space is ready for the change?
Thank you very much for the question, and good morning to all your listeners. In terms of the business space, if you look at the history that has been shared on this call today, with the skeletal transfer pricing provisions and in our legislation, and later having a detailed regulation in 2012, I believe that based on developments as alluded to by Lee in the global space when it comes to transfer pricing, in terms of the business world, our expectation is very simple, and Lee touched on one of them, which is certainty. And that is what we expect from transfer pricing and any other tax legislation when they are being passed, so that the rules are clearer. And if you take a look at the current LI we have, you realize that there has been a shift from what we had previously, where more details were provided or have been provided in certain areas, which helps in the administration of taxes, both from the administrator's perspective and also from the compliance angle. Most businesses would want to reasonably predict how the outlook looks like for them when it comes to taxes. So definitely a step in the right direction. The other thing too is about engagement. When it comes to stakeholders or the business world, we want to also have a say in such legislations coming, and it helps in the process of administering it, because at the end of the day, we made input into what that legislation is that is coming to apply. And the engagements would come in two parts. One, before the law is passed, and two, after the law is passed, we need to further engage to understand how the provisions of the law would be applied, at least at a minimum, to understand what the thinking is on the part of our tax administrators, so that we in industry can also advise our principals on the expectations, so we get ready for it. From where I sit, there were limited engagements on the transfer pricing regulations. I believe that there is room to do more, definitely. It helps in the administration of taxes. And if experience has taught us anything with Act 896, we woke up to see a new full-blown tax law.
Yeah.
And before the implementation date started, we've seen amendments to it already. And those could have been avoided if detailed consultations were done before the law was passed. And when the law is passed, there is room to allow for industry to make an input. Now, the input we seek to make as industry is to be able to make a contribution that is considered. And that is the kind of openness we expect when those consultations happen. It shouldn't be checking the box exercise where industry is informed of what the intentions are and what the directions are. We want to have a say at the table when this is being done. In terms of readiness to implement, I think as taxpayers and with the rule that tax compliance is absolute, we are taking steps to ensure that we comply with the rules as they are. The rules come with additional requirements in terms of documentation, yeah, and also other novel provisions as well. Our expectation is that we engage more. GRA should provide a practice note as soon as possible. I know Eric mentioned that it's in the pipeline. It would be good to have that document out and start having conversations around it to aid both administering the law and also complying with it. So those would be my initial remarks on readiness to comply.
Thank you very much, Jerry. I mean, indeed, engagement with taxpayers is very important, because taxpayers would then feel part of the process and would even understand, the requirements and would be able to implement them smoothly. So thank you. Tayo, can you hear us now? Okay, we will move to George whilst we wait for Taiwo to join us. So George, the new transfer pricing regulation introduced further requirements, such as the country-by-country reporting and the filing full TP documentation, which wasn't in the previous regulation, with very tight timelines, 4 months after end of the financial year. In your view, how can companies ensure they, remain compliant, and what are some of the challenges you envisage?
Thank you, Gloria. I think the first point I want to mention is that, and I think Jerry alluded to that, that is the limited consultation. And I believe that if a lot of consultation had gone in, then you would expect minimal challenge, because taxpayers would have at least been aware of what is ahead and would also have contributed to what is coming. And so there wouldn't be much challenges into the future. But as you can see, you see this new regulation coming with more requirements in terms of filing and disclosures. And so that is one of the stress that is going to put on taxpayers. But also to mention that this new regulation also have provided some relief in terms of safe harbors. So I believe that it's for companies to be aware of these safe harbors and then be able to assess their businesses and take advantage of those safe harbors so that they can put a lot more effort into the areas that they need to ensure full compliance. Once there's need for documentation to be filed, then it is important that taxpayers become aware and also continue to keep information on ongoing basis because of the tight deadlines or timelines that we have to meet. And so ongoing keeping of information, invoices for transactions and all that, I think is very important to help minimize some of the taxpayers' challenge that I can foresee. One other area is also about communication. I think because of the need for country-by-country reporting and all that, it's important that taxpayers start communicating with their parent entities or head office on time, because a lot of the information that will be required for the purpose of those filings are required from the principals, as Jerry mentioned earlier. And so it's important that they put themselves together, do early communication so that the required timelines can be met. As we can see from Eric's discussion, there's also a lot of effort that the tax authorities have put in terms of ensuring compliance with the transfer pricing, even before this new regulation. And so a lot of audits ongoing. And I think that even coming from the recent 2021 budget statement, that there was clear indication of transfer pricing audits being conducted, especially within the extractive sector. You would expect that there will be more audits going on, and so taxpayers should expect a bit more pressure on them in terms of transfer pricing audits. And for that reason, I will encourage taxpayers to, as much as possible, put in a lot of effort in terms of readiness to ensure that when these audits are coming up, they are ready for it, because they definitely will come once you are required to file the transfer pricing documentation.
Thank you very much, George. Indeed, proper record keeping and prompt communication are some of the important things that taxpayers would have to do in order to be compliant. There's a question for Eric. I just want to read it quickly from the participants. Eric, in light of the new rules and lack of guidelines from GRA, when do you expect a new practice note? I mean, end of April? Is it just, end of April is just around the corner with its associated filing obligations? Or will GRA give some timeline? Do you have any information, Eric, to share?
Okay, thank you very much, Gloria. So our consultations with the Revenue Authority, we understand that there are some deliberations currently ongoing. The draft practice notes was shared with some industry experts, and then our comments were inputted in there. So we expect the Revenue Authority to be coming through. In terms of clear deadlines as to when it will be issued, we cannot say for now. but we believe that it will be coming up in the coming months shortly. Per discussions with Revenue Authority, their stakeholder conversations going to finalize that practice notes.
Okay.
And in terms of the second aspect of your question, end of April, just been around the corner, filing obligation existing. We expect that the new regulation will take effect for the subsequent years, and therefore the facets of the practice notes would then come in later to provide further clarity on the filing requirements, respect to year end coming up. I hope that clarifies that aspect.
Okay, thank you, Eric. Tao, if you can hear me, just say hello, and then we can take your question. Okay, it seems we have a bit of a challenge. We will pick.
So Gloria,
yes.
I tried to reach Tayo to see what's happening. He mentioned there's some connection challenges, but he's working on that. So as you go along, try to get back and see if he's been able to connect.
Hello, George.
Yes, he's on now.
Hello, George.
Welcome back. Tayo, we can hear you. Yes, can you hear me?
Thank you.
Right.
I can hear you, Gloria.
Sure. So we wanted you to share some lessons learned from your early adoption of the food transfer pricing regulation with us. I think he's still having challenges. Okay, we will move on then. I will take a couple of questions from the participants, then we continue, and later have Tayo when he's back online. There's a question. I think I will direct this question to Lee. Okay, so when is Ghana likely to be part of the inclusive framework as some African countries have? Lee, do you have any insight?
No, short answer to that is no, I don't. Countries is a political decision for a country whether they do or don't join the inclusive framework. As I mentioned earlier, it comes with some benefits, but it also comes, of course, with some, if you want to call it, commitments. So there's a financial commitment, there's a membership fee to join the inclusive framework. That was originally 20,000 euros a year, increased by inflation per year, so I'm not quite sure where it is now. But I think the bigger issue is you commit to implement the BEPS minimum standards. So countries need to be aware of that and make a decision on whether they wish to make that commitment or not. Of course, if the Pillar 1 and Pillar 2 proposals go through, then countries will in the inclusive framework, will be committed to implement Pillar 1 and Pillar 2. And that will involve also the withdrawal of any unilateral measures, such as a digital services tax, probably. You would have to withdraw those measures if you've introduced them. So there are a lot of political commitments to be a member of the inclusive framework. And I guess that's something that Ghana, like many other countries, will need to consider. And of course, the Pillar 1 and Pillar 2 proposals raise some interesting questions for countries who are not members of the inclusive framework. So will you be allocated the so-called amount A under Pillar 1 if you're not an inclusive framework member? I think the answer to that is probably no, you won't. Will you be allowed to implement the Pillar 2 minimum tax rules if you're not a member of the inclusive framework? We don't know the answer to that. We also know, of course, that previously the European Union has blacklisted countries who have not joined the inclusive framework. That included, for example, Namibia, a small African country. That's something that we think is of concern within ATEF. We don't think it's appropriate for the European Union to essentially be coercing countries to join the inclusive framework. Will they take a similar course of action if there's a global agreement? Will they take that course of action for countries that are not members of the inclusive framework now? So Namibia, for example, ended up joining. Will Ghana be put under pressure by the EU? Who knows? We don't know the answers to those questions. I'm not sure where Ghana is in the political process. My understanding is they and several other countries in Africa are considering the position. Maybe they are waiting to see the outcome of the digital project. So I think it's an interesting issue. We should know the outcome by the middle of 2021. You know, the G20 finance ministers met on the 7th of April and renewed their commitment to reach an agreement by mid-2021. And you may have seen that the US has put forward new proposals to try to reach that commitment following the change in the US administration. So I think there's a bit of renewed momentum in the process, and that's something that might influence Ghana's decision at a political level. Thanks.
Sure, thank you very much. Eric, I think this question will go to you. In respect of the 2020 financial year end, what is the filing deadline for transfer pricing returns?
So 4 months after the financial year end, so for 2020, you'll be on, depending on your financial year end. If your financial year end is December, then it will be 4 months of the financial year, meaning 30th of April 2021. So depending on your financial year end, it's 4 months after your financial year end. That's the deadline for transfer pricing. Yes.
Okay, Eric, there's another question. I think you can take that alongside. Does the new law apply from 2020 or starts in 2021 accounting year?
So the new law applies to the 2021 accounting year and not the 2020. So it depends on the transitional provisions that are provided in the law under the LI. The regulation did say that if you had some assessments that were being reviewed as per the old law, the LI 2188, then it would apply. If you look at the provisions under the Income Tax Act, Section 138, it looks that years of assessment that started before the passing of a regulation or the law, with respect to when we were looking at the Income Tax Act, would apply. The old law would apply until the new year of assessment starts. So any year of assessment that starts before November 2020, that's the 2nd November 2020, the old law does apply.
Okay, thank you. There's a comment here. Someone wanted to know if he could record the discussion. Please don't record. We indicated earlier that the discussion will be recorded and uploaded onto our YouTube channel. So if you want to listen to it again, you can visit the Deloitte YouTube channel and listen to it, but please don't record. Thank you very much. Tao, if you are back online, can you hear us? Please say hello. I want to hear your voice. Okay. Okay, we will move on. We'll move to Lee. I have a question for you. It's been one of the key issues that has come after the passing of the new legislation. Taxpayers are complaining about the additional burden of country by country reporting, food transfer, pricing documentation, and all the burdens that comes with it. But your experience, and are you able to share some perspective, you know? So as an ecosystem, that is government, tax administration, and taxpayers, how we can find the right balance between addressing the issue of transfer mispricing and taxpayer compliance?
Yeah, it's a very good question. I think it's probably it's one that's been debated for a long time about how you create this balance. I'm not sure I would use the phrase transfer mispricing, but the balance between the tax administration having tools to address transfer pricing risk and also not creating an unnecessary compliance burden on taxpayers. I mean, I think, you know, the international tax rules try to create that balance. And I think, therefore, regulations that are fairly aligned with the international standards seem proportionate. I'm not sure that the documentation regulations would be any more stringent in Ghana than they are in most other countries in the world that a multinational has to comply with. So it doesn't seem unreasonable to expect a taxpayer in Ghana to have to comply to the same level of transfer pricing documentation requirements as other members of the group in other jurisdictions, which seems reasonable to me. I think we will be entering a new era in terms of this issue following the pandemic. Governments around the world will be looking to raise the revenues they need to restore their economies, rebuild their health sectors, etc. And I think you can see a reflection of that in the US's new tax plans, where I think you're seeing a message that says there will be zero tolerance to tax avoidance. That's also the view of most of them, or well, all of the members, I think, of the inclusive framework. You're seeing the US now talking about a 21% global minimum tax rule for US multinationals. And we may see that reflected in the Pillar 2 negotiations as well. So I think you are seeing a message going out saying, governments will not tolerate international tax avoidance anymore. And there's a need to rebuild the confidence of citizens that multinationals are paying their fair share of tax. At the same time, countries will need to attract foreign direct investment, and they'll need to look at how they're going to do that. And I think the other message we're seeing come out of the US is a wish to stop the race to the bottom on corporate income tax. That's a view that I would say is shared by ATAF and many of our members, that they wish to see that race to the bottom stopped. I think in an African context, that's probably more in terms of how tax incentives, for example, are granted, rather than necessarily an issue around statutory rates of tax. But overall, yeah, I think you will see that that's a difficult balance to achieve between those two things. But I think what we're looking for in Africa is to see clear, transparent rules that comply with the international standard are reasonable and proportionate. So we, for example, have advised a number of African countries that some of their penalties aren't really proportionate and appropriate. So I've seen countries where the penalties for not meeting documentation requirements are either $500 fine or 6 months in prison. Well, neither's appropriate in my view. $500 is clearly meaningless to a multinational. 6 months imprisonment, well, I'm not sure not keeping your transfer pricing document constitutes or necessitates spending 6 months in prison. So we saying to countries, that's not really appropriate. You need a rule that says, here's a much more appropriate monetary penalty, but it's not really a criminal offence that you should go to prison for. So I think, that's a sort of balance that we're looking to try to get to. I think that's the way more and more you will see countries moving in that direction. Country by country reporting, well, that is an international standard. So I think, again, what we've seen is that is changing some behaviours over compliance. There's a review of country by country reporting going on now. I think that could lead to some changes. I'm not sure that many African countries receive the country by country report because they have difficulties over confidentiality standards for automatic exchange of information. So there are some areas that need looking at, but I think the general view is it has helped to address BEPS. Thanks.
Thank you very much, Lee. Jerry, I'll be coming to you now. This will be, from what Lee has described, it's a bit difficult to find a good balance between, some of the safe harbor rules, which are sweeteners in there, and then the compliance burden. Okay, so in your view, to what extent will this simplified approach rule make compliance easier for companies in Ghana? So we have talked about the safe harbor rule and the benefits in there, and then the country by country report filing. So what do you think as a taxpayer?
Thank you, Gloria. My answer is very simple. We want more sweetness. Let me just elaborate on that a bit. And I think it's a good addition to our law. It's a pleasant surprise, if you ask me. I'm not sure how it works out, whether the simplification, there is a research that directly links simplification to more compliance. But I generally believe that simplification definitely helps. Even if in the absence of any research on that, when it comes to the basics of taxation, from both an administrative angle and from a compliance angle, simplification is the way to go, if you ask me. So it definitely helps in reducing the compliance burden. As Lee alluded to, you need to always find a good balance between the two when it comes to the documentation requirements and also simplifying it to make it easy for the taxpayers. You need to always find a balance. As industry, we believe that the simplification provision we have in our current law is a good starting point. Our ask is that it shouldn't be the end of it. We should continue to review our tax laws, our transfer pricing rules, and see how to expand the scope of the simplification rules, especially in the safe harbor laws. And one way of doing that is to approach it from a risk-based approach. So what is the risk associated with an area? If it's low, then let's consider how to expand the safe harbor rules in those areas. And it's going to be a continuous effort. What we've seen in the past is that once such rules are made, they are left unreviewed for a long time. And over the years, it becomes virtually irrelevant in terms of dollar terms, and also based on the changes and development in the transfer pricing space, they may not be relevant at the time. So in a nutshell, we are asking for more. It's a good starting place, but it's good for them to continue to see what areas can they still extend the safe harbor rules to, so that it minimizes the burden on taxpayers. We are in no way saying we do not want to comply. The compliance is absolute and we are willing to comply. We should make it easy for us to comply when it comes to less risk areas.
Absolutely. Thank you, Jerry. Do we have Taiwo on the line?
Yes, I'm on the line. Unfortunately, I'm going to leave my video off so that
Okay.
the bandwidth will be able to accommodate it.
It's fine. So, Tao, in line with discussing penalties and, sweeteners, I want you to share a bit of a perspective, because I'm aware that the Nigeria Shing at the time included some significant penalties for non-compliance. Okay, so how has that, coerce or encourage taxpayers to comply and file their returns and be compliant?
Okay, so I think the word I'm going to use is how has it been able to persuade taxpayers to comply?
Yes.
When the first transfer pricing regulation was released in 2002.
Tayo, can you hear me?
Very unfortunate.
Yes, his connection is not the best today. We would have
New
loved.
penalties were
Okay.
introduced. Hello, Gloria, do you want me to do something?
No, go ahead. We can hear you now. Go ahead.
Okay. So when the new penalties were introduced in 2018, the initial penalty was about, I think, $63 for the month of default. So if there is any taxpayer that failed to comply with the provision of the transfer pricing regulation, you'll be liable to about $63 for in the first instance, and about $13 for every month the failure to comply continues. But in 2018, the penalty was increased to $25,000 in the first instance and $25 for every day the failure to comply continues. So what this means is that a lot of taxpayers started complying because of the steep penalty and the fact that the taxpayers believe that complying is less expensive than not complying. So if you think the penalty that you're going to be subjected, so even though the penalty persuaded taxpayer to comply, we have seen a bit of challenge around how the taxpayer has applied the provision relating to the penalty. There have been a bit of misunderstanding around the interpretation of the provision, especially when it comes to the provisional transitional provision that was not included in the tax law, in the transfer pricing regulation. So what taxpayers have been doing now is to balance the long-term negative effects of imposing penalty and the short-term benefits, because a lot of taxpayers have been discouraged from continuing to invest in Nigeria, because when you know that penalties will be imposed, even though the provision of the law is not.
Okay. Tayo, please hold on. We'll come back to you. I think there's still a bit of a challenge with the connection. We will come back to you to complete that contribution you were making. Eric, there's a question from the participants. With respect to transfer pricing safe harbor rules, is the 2% net profit threshold for TTAs a combined rate for all fees, that's royalty, management fee, etc., or it's a rate for each fee? Eric.
So the TTA applies per transaction, so 2% or up to 2% for royalty, up to 2% for management and technical, and up to 2% for know-how. It's not a combined rate, but individual rates per each transaction, once approval has been obtained from the GIPC for the TTA. Okay,
that is fine. I have another question from the participants for you. Okay, what are the key points to note in the new transfer pricing regulation, and how different is the new regulation from the old regulation? I know you touched on this in your presentation, but at high level, if you can just mention 2 or 3 differences between the old and new, I believe it will do this person a lot of good.
Okay, so the old regulation sought to provide compliance for TP documentation and then filing of transfer pricing return. In the old regulation, transfer pricing or the local file was supposed to be put in place and submitted upon request. With the new regulation, the fee tier filing has been introduced in line with the BEPS Action 13, and it mirrors more of the OECD guidelines in terms of the provisions in the cost contribution is being provided. Some details are provided in terms of financial arrangements. As I said earlier, intangibles, they provided some descriptions for the MP analysis and how valuation of brands will be done in terms of the enhancement and exploitation by the Ghanaian institutions. On top of it, also the filing requirements has also increased. In the old law, the XYLI 2188, it sought to request that only transfer pricing return should be filed 4 months after financial year end. With the new regulation, it requires that in addition to the transfer pricing return being filed 4 months after financial year end, we're supposed to prepare a local file and file 4 months after your financial year end also. And also your group is supposed to complete its master file and submit in Ghana 4 months after the financial year end. So we have two additional requirements for the 4 months after the financial year being included in the new regulation. And also a country by country report or notification is supposed to be submitted with the Revenue Authority 4 months, 12 months after your financial year end. So as I gave the example earlier, if your year end is December, and we're looking in terms of your year end December, you're supposed to file on or before 30th of April for your local file, your master file, and your TP return. And then if your year end is December, you're supposed to file on or before the 31st of December, your country by country report or notification to the Revenue Authority.
Thank you, Eric. George, I think there are questions around when the new transfer pricing regulation was issued. I mean, that was somewhere November 2020. So tell us, what are some of the transition issues that taxpayers should be aware of, and I believe should help them in preparing to comply?
Thank you, Gloria. I think the basic transitional issue has to do with the start dates of the new regulation, and I think that the new regulation, as we are all aware, took effect from 2nd November 2020. Usually, when you have tax laws being passed or regulations being passed, it comes with specific transitional provisions. Yeah. This regulation did not necessarily provide much details as far as transitional provisions are concerned. And so one of the major issues will be, which year should we start? Do we start with 2020 year of assessment to the extent that it came before the end of the year? Do we start in 2021? And I think Eric has mentioned some aspect of it. And that is to say that what we have seen in the past is that when tax laws or regulations are passed, the law makes specific provisions for transitional provisions. What we've seen from previous laws is that the transitional provision provides that the application of the new law takes effect from year of assessment that commences after the passing of the law. So if your year of assessment is starting before the year in which or the month in which the new law was provided, then it means that the old law is what should apply. That's what we have seen under previous or other laws. As this law did not specifically provide, we anticipate that similar provisions should, or similar considerations should be applied. But also to say that we are very much aware that the GRA is working on guidelines or practice notes as far as this new law is concerned. And we believe that this is one of the things that they are going to address so that there's clarity as far as taxpayers are concerned. But in our general view, we think that given the time in which this law came into effect, if anything at all, it should start from the period after 2020, which is from 2021. That's our expectation. But we believe that the guidelines should provide specific position on the transitional agreements.
Right. Thank you very much, George. There's a question from a participant, Philip. Eric, I'll pose that to you. Please, can you confirm that if an entity conducted business with related parties and met the $200,000, before November 2020, then that entity would not be required to provide a local file when filing TP return by April 2021?
Okay, thank you very much, Gloria. So Ghana's law do not have retrospective effect, and therefore the provisions of the new regulation will not apply to transactions that happened before the passing of the law. As George just alluded to it, financial years or years of assessment that started before the regulation was passed is not under the new regulation. So once these transactions took place before the passing of regulation, then it's not applicable. And therefore, the safe harbor provision for the 200,000 will not apply for transactions that happened before the passing of regulation. Any transaction that happens after the regulation, as George just said, 2021 financial year or year assessments is where we are considering that these safe harbors will be applicable. Right. Thank you.
Okay, thank you very much, Eric. There are a couple of questions about sanctions and companies that are required to file transfer pricing documentation and some other ones, but in the interest of time, we may not be able to take all those questions. So participants, feel free to connect with us at Deloitte, and we would send you an email. We will share a document with you that should explain the basics about transfer pricing and what the requirements are. At this juncture, in the interest of time, we'll be ending the panel discussion at this point. We would have loved to have the Nigerian perspective, but it's fine. Another time would make arrangements to bring Taiwo to Ghana so that he will share the office with me and have the discussion. But thank you very much to my panelists.
Let me check your email.
Thank you very much to you all, my panelists. Please mute your mics. Please mute your mics. Thank you very much. It's been an insightful discussion, and I know that the discussion wouldn't end here. We will be connecting with all of you individually to share perspective on some other areas that may come up, or after putting together questions from the panelists, especially those we couldn't touch on this morning. So expect to hear back from us after today's discussion. But it's been a great discussion we've had today. Lovejoy, if you can hear me, you can take over and then close the meeting. Thank you very much.
Thank you so much, Gloria. Thank you, panelists. Thank you, participants, for your questions. I've actually learned a lot in this discussion, and I believe we all here have learned so much. It's worth it. We just want to take the result of the second poll for us to have a fair idea, the priority we give to transfer pricing. So with the second poll, we realized that quite fairly a number of people have given the transfer pricing compliance a level of priority, which is okay because it's a new area and the risk associated to it. So with the understanding we've gathered on the call, I think going forward, we would have to engage more, communicate more to make sure that the documentations are actually done, and then we are able to meet the deadlines, so we don't allow ourselves to be penalized by the commissioner or the Ghana Revenue Authorities with interest and penalties. That is very okay for us. Without further ado, I think we'll take our closing remarks from George. So if George can hear me, he can take over and give us the closing remark.
Thank you, Lovejoy, and thank you to everyone for joining us today. But before we go, I just want to touch on some few takeaways that I've jotted from these discussions. And one, it is obvious that transfer pricing is now a big issue as far as Ghana is concerned, and globally, it is what is happening on the global terrain. So we need to ensure compliance with transfer pricing requirements. And as we have all been aware, transfer pricing audits is ongoing, and the tax authorities have become a bit more aggressive. But I was alarmed, or I was a bit scared when Likori presented and mentioned an assessment of 1.6 billion that was assessed on some companies. I think that was a significant amount. And so we should be aware of this and ensure that we conduct our own internal risk assessment as far as transfer pricing is concerned, identify areas that are of risky as far as non-compliance is concerned, and also understand the requirements under the new regulations and also the safe harbor issues that were discussed. Ensure that we are putting mitigation plans to minimize any transfer pricing risks on your side, and also ensure that you do documentation, keep invoices for transaction agreements that support that transactions are to also be put in place so that these can be provided or supported during the transfer pricing audits. The issue of safe harbors has been discussed, and you need to get more insight into it so that you can take advantage of it appropriately and apply it, as well as the simplified approach that has been discussed. Also, to mention is that Deloitte, we are here to help you. We are available to support you, do the various activities or requirements as far as transfer pricing, filing, or compliance is concerned. And so we are able to help you with preparation and filing of your transfer pricing return, preparing your country by country reports and notifications, local file preparation, master file preparations, filing of contemporaneous documentation, and then also application to the Commissioner General, where you intend to use, you require a different method other than what the transfer pricing laws are concerned. And also help you to do an internal health check to see how, to what extent you are complying with the transfer pricing regulation. And finally, to say that we are available to support you to go through transfer pricing audits, provide you all the necessary assistance we have done for a number of clients, and we are happy to assist you go through transfer pricing audits, provide all the support so that we minimize the risks. At this point, I want to say a big thank you to all of you for joining us. Likori, we thank you so much for your support. Tayo, we thank you. We'll get back to you so that you provide us written responses to your question as Gloria asked, and then we'll share with our participants. So questions that were not answered, participants will put them together, put responses, and then we'll share with you subsequently. Thank you so much, and we are happy to see you today, and we believe that we'll see you in our next sessions. Thank you.
Thank you, George. Quickly before we go, we'd like to take our last poll for the day. And as usual, a pop-up will appear on your screen for you to answer. While we do that, in the Q&A chat box, we have a survey link in there. As we earlier mentioned, you can click on the link to provide us with your feedback on the webinar, the session that we've had so far. Also, we will put the contact details of our transfer pricing manager, Eric, so that you can reach out to him if you have questions and want further deliberations. We finally mentioned that this video was recorded, and so if you have the chance, you can go to Deloitte Ghana YouTube channel and have a view. You can just go and listen to it once again. We appreciate your time spent with us today. Merci beaucoup. Please feel free to contact us on any of the contacts showing on your screen, and please have a blissful day. Bye-bye.
Significant global regulatory change combined with rising demands for tax transparency have left some of the most seasoned transfer pricing leaders feeling overburdened and uncertain. How will the BEPS actions be implemented in each country? Does our transfer pricing model align with the commercial objectives of the business? Is now the right time to automate our processes? Deloitte's holistic approach to transfer pricing focuses on the unique needs of your business and empowers you to proactively manage tax affairs, reputation, and revenue authority relationships. We provide a clear perspective to guide you through uncertainty in the global tax environment. We help you mitigate risk by developing robust, pragmatic transfer pricing policies and globally consistent documentation processes. Our suite of transfer pricing technology tools includes digital docs, which help centralize data collection, monitoring, and standardize report preparation. In addition, document version control and real-time status tracking on a central online platform provide you with visibility over your transfer pricing operations. We use a formal, centralized global project management program to efficiently coordinate communication, monitor progress, and quickly escalate issues. Deloitte's approach to transfer pricing equips you with the information needed to engage and inform the business on the issues that matter. Clarity, consistency, and confidence. That's how Deloitte empowers you to renew your global approach to transfer pricing. Significant global regulatory change combined with rising demands for tax transparency have left some of the most seasoned transfer pricing leaders feeling overburdened and uncertain. How will the BEPS actions be implemented in each country? Does our transfer pricing model align with the commercial objectives of the business? Is now the right time to automate